These things aren't being talked about, and that's what we're here to do, and that's what we are now doing. This is a fact. This is what happens in every single market around the world for hundreds of years. That is what happens in the real estate market. This is clearly demonstrating that people aren't renting property for 2 months plus, and we can't find a tenant. This is now an internal change affected in its own economy of Dubai. It's going to be tough. It's going to be very, very tough, this. The freefall of the rental market. Now, this is something you're going to want to watch, and this is some figures that you're going to want to see. Welcome to The Big Short, everybody. Welcome to all those people that have watched us before, 100,000 views on our last video, so a big, big, big thank you. And of course, welcoming everyone new to the show. Check out our old video, some great information for you. For those that have seen the show before, you will notice I'm missing Louis Bowers. Now, he's actually traveling, I should say, at the moment, but the show still goes on, as they say. So let's get into it, shall we? Big figures to start with. So Espace, I'm sure you've heard of them. If they're not the market leader, which I'm pretty sure they are, for selling villas, they are definitely in the top 1, 2, 3, 4 companies. Now, they have actually just released their report, and there's some very, very, very scary figures on there. It would appear, and it would show, that the transactional volume for villas in the top 20 communities in Dubai is in free fall. Let me just give you an example of what we're seeing so far. Meadows has seen a 20% drop in transaction volume. Jumeirah Islands, 12% drop. Jumeirah Park, a 17% drop. Jumeirah Golf Estates, a 20% drop in transactional volume. This all goes on and on and on, right down to one in particular, the Green Community, a 30% drop in transactions. So this is H1 of this year compared to the same time last year. So this is telling us, and I'm sure you, one thing: people aren't renting. So let's not talk about the stock, which we'll talk about in a minute. Let's just forget about that. Let's just look at what's going on here. This is clearly demonstrating that people aren't renting property. There aren't the people here in Dubai to move into these properties, because if they were, transactional volume would be stable, or if anything, it would be going up. But it isn't, it's dropping, and these are double-digit numbers. So what happens? What's gonna happen? Well, it's a very simple formula. If there's no demand, transactions will drop. If transactions drop, it means prices will drop to stir up interest to try and find a tenant to move in. This is the next step. This is what will happen next. If transaction volumes are dropping at the rate they are, in accordance with Espace, this will be the next step. You're going to see prices drop. So check out their reports, lots and lots and lots of useful information there. Scary stuff. So that's an opening statement for you, isn't it? So the big thing here that really caught my attention with all of this is villas. Villas are meant to be or portrayed as utter gold dust in Dubai. There's not enough of them. The demand is through the roof. It's villas, and villa prices go up, and everyone wants villas. Well, that's not the case here, is it? Because we're seeing these transactional volumes drop at an aggressive level. So something to think about, everyone, is something I wanted to open this show with, because I think that is a hell of a change in trajectory for this market. Let's move on, shall we? Right, so the source, the Espace H1 report I've just talked about, and Allsopp, you've all heard of Allsopp, probably the biggest real estate brokerage there is in Dubai. They've released their report. So what are they saying? The rental market trends, according to Allsopp's H1 2025, lettings are down 28% compared to H2 24, and rentals are down 27% H1 compared to, H1 2024. So whatever way you look at it, whether it's H2 or H1, you're looking at 28% drop in transactional volume in general across Dubai. So supply versus delivery, the imbalance, right? And this is a big one. This is a big one. So Allsopp report, again, H1 2025, 81,000 units, 672 units were launched. So that means people have come in and bought them off plan. They don't exist at the moment. 16,744 units have been handed over. That means they exist, the owners have come and collected the key. Let's look at that as a ratio, shall we? So that's 4.88 for every one unit completed versus every unit that's launched. So look, let's round that up, because that's what we do here, don't we? So for every 5 units being launched, 1 unit is handing over. That's a lot of stock. That's a lot of stock. Now, if you watch my previous shows, we all know that transactional volume in general is dropping, and we all know that stock coming into the market is rising. Now, the last count was around 350,000 units, give or take, in the next 30, 35 months. I would assume, given the fact that there's a launch now every 11, 12 hours, that will be nearing 400,000 units in the next 30 to 40 months. 400,000. And bear in mind, transactional volume is dropping already. That's before this has come in. So again, this is something we've got to separate, but obviously combine, because it's not painting a very good picture. So the next one is sales market insights. This is in the Espace report H1 2025. So new property listings, this is Espace's data, are up 159%. Well, of course, available properties going up because transactions are dropping. There's a lot of supply. Price reductions are up 147% versus H1 2024. So you are seeing a lot more stock, 159% more stock in H1 of 2025 compared to H1 2024. And you're seeing price reductions up 147% H1 2024 compared to H1 2025. It's not looking good, is it? So clearly that's identifying a lot more stock available, so they're having to source price reductions to get rid of it. And then their average sales price is down 3%, H1 2024 compared to H1 2025. So that is now showing a negative as well. So look, the recap on this is pretty simple. You're seeing a huge amount of stock coming into the market with a 5-to-1 ratio of handover versus your launch of off plans. And you're also seeing a lot more stock available, which is meaning a lot more price reductions. What does this mean? Values are going to drop, and you've already seen that starting with sales prices dropping 3%. So look, couple that with what we're now seeing in the villa market as well. Interesting times ahead, isn't it? Right, let's move on, shall we? So let's talk about the AirDXB Q2 2025 report. Now, we've just launched it. Go and check it out. Absolutely amazing. Our website, www.air-dxb.com. Go to Data Insights. It's there. We look at the market in general, and of course, we're imbalanced. You know, we don't, you know, whether the market's falling or going up, you know, we're neutral to all of this. But we've also put in there our short let report, so check that out. So there's a quick, just a quick bit of information there for you, of course. So let's look at our report and what we're seeing. And again, look, we're trying to find different avenues to express and show that there is a lift or there is something positive within the market. But whatever way we look at it, we're still finding negatives, and I'm going to explain how. So the long-term rental pressure. So the AirDXB Q2 2025 real estate market report highlights increasing strain on Dubai's long-term rental sector. We know that because of what I've just said to you. So consistent negative trends. So whether measured quarter on quarter, year on year, or half on half, the data shows a consistent downward trend across the board. And here it is. So H1 24 versus H1 25. Total contracts down 7.34%. New leases down 18.46%. Renewals down 0.59%. H2 24 versus H1 25. Total contracts down 16.01%. New leases down 29.06%. Renewals down 7.53%. We go on, and the slide will be up, and of course you can contact us for information. But then we jump onto quarter on quarter. Quarter on quarter, Q1 2025 versus Q2 2025. Total contracts are down 12.9%, but new leases are up 4.2%. So that's the one positive we found, but renewals are down 20.4%. So completely and utterly annihilates that figure. So the rental market is appearing to be incredibly challenging. So what we're seeing now is lease renewals, new leases dropping, stock going up, and then we're going to put 300,000-400,000 units into the market in the next 30 to 40 months. Going to be tough. It's going to be very, very tough, this. All right, so let's move on. Interesting company called Takeem. This is a company that you definitely want to get in touch with if you're a landlord. They can effectively insure any rental contract if there's any defaults. Now, I'm not going to say any more because I don't know the ins and outs, but contact them. Sounds like a great company. And in this environment and in this market we're heading into, you want to talk to these guys, quickly. So there's a wonderful chap over there. I'm still yet to meet him, and I will at one point. His name is Recession, and he's come out with some figures which are very, very interesting, very sobering, I should say, as well, as to what they are seeing in the market. And I believe they have access into lots of different companies, institutes, or whatever. Again, I won't say too much. It's their business, and they can give you more information if you require. However, information they've made public, and it's on their LinkedIn. is that Takeem on LinkedIn. So the H1 key market indicators, the Dubai rental market analysis is what they're saying. 2 consecutive quarters of negative growth. Q1 2025, the lowest year-on-year growth rate in 2 years. Q2 2025, negative performance wiping out the Q1 gains. H1 2025, the result is minus 8.3% to minus 11% year-on-year decline. So what you're effectively seeing is 2 quarters of decline basically. And that would suggest that the market is heading in a certain direction, which we could use that word, which I've got to be careful, which I'm not going to, but this market is heading, I think if you see another quarter like this, then we can firmly say that this market is now into a recession. So let's see. There's lots going on, which we'll talk about in a minute, with new initiatives coming through from the government, which are great, which are fantastic. But this is what this show is about, is pointing things out, because we know that especially brokers who are on commission only are saying that the market is brilliant, and they're always comparing year on year, or they're focusing on one segment of the market which is off plan, which we know is dominating transactions with around 70%. But these are the figures that you need to hear, because on the other side, these things aren't being talked about, and that's what we're here to do, and that's what we are now doing. So again, all this information is taken from sources online. None of this is my opinion. This is all public information. We're just consolidating it and giving it to you in this short, sharp video. So what else does Takeem say? They go on to say there's a record non-renewals and early terminations is their own data, which they're coming out and saying, again, talk to them if you want to know more. But they're saying that default rates have basically gone up since December. So in the last 7 or 8 years, default, so this means people that aren't paying their rents, let's say, has doubled in 6 or 7 months. That's a big figure. And they go on to say as well that the H1 rental volume year on year is down 8.3%. Again, another source. So we've now got Espace, we've got Allsopp, we've got ourselves, and we now have Takeem, all saying the same sort of information, that you are seeing a decline, especially in this rental market. Now, the big thing to point out here is this is like a domino effect. It's very simple, like I've said earlier, supply and demand. If the demand isn't there and supply is going up, what will happen? Transaction volume drops, prices then drop to attract tenants or buyers, and then that's when you start seeing the prices drop. But this coupling all this information together, what you're then going to find is if prices are dropping on rental, it means the yields aren't as good as what they were, which means your buyer will start negotiating more aggressive on price, which will then see prices drop. So it all starts with rentals, it all starts with the demand, and all of this is happening. The demand is dropping, price reductions, as Espace have already pointed out, are now happening, which means the returns aren't going to be as good, which means any buyers are going to look at this and say, well, I'm not paying that price because the returns are now 2, 3, 4%, and I want 6, 7%. So that's what you will see. And this isn't an opinion, this is a fact. This is what happens in every single market around the world for hundreds of years. That is what happens in the real estate market. That's what we're seeing. And this is, again, 4 sources so far, all saying the same. And I'm sure that between the sources here, you're looking at Dubai information, data that they release, which I know a lot of people get their information from. And of course, as I've already pointed out, a few of them using their own data. So this is a phenomenal mix of data coming through, but it's all pointing one direction, isn't it? So let's move on, shall we? So big thing here that I don't think, again, gets enough attention, that's the job market in Dubai. Now, we've looked into it and we've come out with some facts, figures, some sources. Again, sources. This isn't our figures, this is sources, this is market, this is data that's in the market. So any of you can go and Google it and have a look at it yourself. But here you go, listen to this, because if the job market starts decreasing, it means people don't have money, which means they can't afford their rent. Now, I've already pointed out, according to Takeem, that defaults of people not paying rent are up 100%, right? So if the job market starts dropping, which it is, this will then have its a roll-on negative effect as well. So let's get into this part of it. So, right, the cooling of the Dubai real estate tied to the job decline. So according to Fitch, now Fitch, we did not talk about this in our last video, even though it was out, but wow, didn't we see a rush of real estate brokers to their phones to video their comments upon what they believe the Fitch report is, and is it right, is it wrong, what is it? But we all know Fitch is a global firm. It's hard not to listen to them, and hard not to listen to what I'm saying in this video, because when you combine what Fitch is saying, what we're saying, it does pretty much point out what's going to happen. Now, they're suggesting a 15% drop in prices by the second half of 2025. So by the end of this year, they're claiming a 15% drop in prices. Given the information I've given to you so far, I think we can see that, can't we? So Fitch have said that. I'm sure you've all seen the reports. I'm sure you've all seen everyone commenting on it. I'm not going to get too much more into it. I intentionally didn't talk about this in the last show because I wanted to see what the rest of the market was going to say. And of course, a lot of people saying, well, I don't think it's going to be like that, but I don't know. Look at what I'm saying to you now. I can see it being that. Could be more. In certain parts of Dubai, it could be more. And that's one thing I think we also got to touch on now. What Dubai is now seeing is segments breaking off. Where you once saw the whole Dubai market go up and down at relatively the same pace, what you're now seeing is different communities outperform each other's in both ways, either with prices up, prices down, which is very interesting to see, because when we look at the global economic situation, we know that a lot of people have been pushed to Dubai, which we know we've been seeing and watching for the last 2 years. But what you're finding is this change and this decline is within the Dubai city. This is not due to economic external factors, because they're actually positively pushing people to Dubai. This is the fact that Dubai has its own situation here developing. So when we then look at a potential drop of the 15%, that is a generalization. When you look at places like the Palm, Emirates Hills, I'm not necessarily suggesting it's going to happen there. So again, you need to speak to whoever you speak to and trust and advise, look at our reports, look at whoever else's reports. But I think you'll start seeing a divide in different locations going up and down. Whereas I remember, as I've explained in previous videos, I've been in Dubai now 13 years, all the market went up regardless of area and all the market went down. We know in the last 2-3 years, all the market's gone up, but now you're beginning to see some areas, as I said, perform worse and better than others. So that's one thing I do want to point out as well. Although Fitch say it's a 15% drop in Dubai in general, I think you'll find more areas will be affected, higher than 15%, and other areas affected lower because of supply and demand, because this is now an internal change affected in its own economy of Dubai. This is not like 2008 when there was a global financial crash and that just wiped out the entire world and that came from America. What is going on in Dubai here is going on in Dubai only. So it's cooling its own market. So let's move on. So that's Fitch. So right, the residential property prices surged by approximately 60% between 2022, which we know, and Q1 2025, as confirmed by Fitch and Reuters. We all know that. We know this market's been amazing. Of course it has. But Fitch and Reuters report that 210,000 units are scheduled to be delivered between 2025 and 2026. It was meant to be 75,000 handing over this year. Now, we do hear, and we're still working on it, but we're hearing that quite a few developers are now moving building works on quicker. In fact, we did hear that some buildings in Greek Harbour are handing over a year early. So we know the developers are working phenomenally quickly to not only deliver on time, but deliver early. Now, I know the general global opinion on developers is that they always hand over 1, 2, 3 years late. I'm from the UK, I'm from England, they always hand over 2, 3 years late. But I think Dubai's been incredibly aggressive in getting these units done quicker. So that 75,000 units could happen. They're suggesting 210,000 units by the end of 2026. It's probably too high for what I believe, but I could see 150,000 units coming in. And bear in mind, that's 150,000 units coming into a market that's already seeing a huge decline in transactional volume, as I've already pointed out in this video. So they go on to say as well, Fitch notes that banks have reduced their real estate exposure from around 20 to 14% of gross loans. So banks are obviously being very cautious on what they're doing. Both banks and developers have the ability to tolerate falling property prices due to reduced exposure. So the banks and developers are obviously forecasting, they have to. This is what Fitch are doing as well as forecasting. And they're of course then adjusting their business model. So again, this is something that we can't ignore, because if developers and banks are adjusting their business model, they could be waiting for something to happen, should we say. I think we'll leave it at that. So let's move on now. So the cooling Dubai real estate market tied into the job. So as I said earlier, let's talk about that job market. So according to the National, job listings now receive up to 2,000 applications per role compared to 100 just 2 or 3 years ago. So again, that's telling you there's a lot more people that are in Dubai that are wanting jobs and can't get the jobs. If they can't get the jobs, they don't have the money. If they don't have the money, they can't pay rent or buy property. Again, this is a domino effect that we could be seeing. So 51 to 53% of professionals say it's become harder to find a job due to increased expat competition. That's from the National. Again, we know that because we've seen the influx of population growth over the last 2 or 3 years. The Gulf News survey shows 75% of professionals in the UAE and Saudi Arabia are actively job hunting, with many reporting fewer responses and greater difficulty. According to Jafora Murphy, so Cooper Fitch, salary inflation has ended, compensation has plateaued, and tax-free income is now the primary incentive. So I'm speaking from AirDXB's personal perspective, we have seen job applications double or triple in the last 6 to 9 months, and we're also seeing more applicants drop their salary expectations. So I, for one, can say that I'm seeing a change in this job market. So we are seeing people out there hard pushed to now find jobs and, of course, get a salary to pay bills. So this will have a knock-on effect. This is having a knock-on effect, I'm sure already, as we've already discussed about the rental market and transactional volumes dropping. Could it be that these people can't find jobs and are now going home? And that's why transactional volume is dropping. Because transactional volume, we have had people say, oh, transactional volume is dropping because more people are buying. Well, sales volume is dropping. So that can't be the case, can it? Because as we discussed in last video, it's dropping around 9-10% also. So this could be a situation where people are trying to find jobs, can't find jobs, and deciding to go home. And that means they're not renting, and that's why you're seeing a drop in rental transactions. We shall see as time goes on. That is purely my opinion. Again, I'll caveat that massively. So the DLD, the National and the AirDXB Q2 reports. So the Dubai government's 3 key real estate support initiatives. It's everywhere. Everyone's talking about it. First time buyer incentive scheme. So targets properties up to 5 million, offers easier payment plans and financial guidance, aims to boost demand and make home ownership more accessible, expected to attract 5,000 new investors to 2025, supports market balance and sustainability, etc., etc., etc. Great to see. Needs to be done. I have seen lots of this. I've been in real estate now for 25 years. I was back in the UK in the late 90s, early 2000s. So it's always something that has been there to help incentivize. Perhaps this is something that's now been brought in to help and assist with transactional volume, to boost that back up. Either way, great incentive by the government to help people get into this market. But look, it's just been introduced, so we don't know what the impact's going to be. We're going to have to wait and see. It will have a positive impact, we know that, but we don't know to what level. So watch this space. The second one is the real estate tokenisation. Now, this has been around for a long time. So Stake, if you don't know of them, go and talk to them. They're absolutely brilliant. They have a lot of property that they have effectively tokenised over the years. Now, it's great that the government is now involved in this. So it was launched in March 2025. Expected to reach 60 billion, which is $16.3 billion by 2030 in transactions. And they've partnered up with the MAC, Mantra, MAG, etc., etc., etc. Again, something that's been around. Stake have been around now for years. They've been doing this. It's something in the market. It's effectively, you can buy a share into a property. When they sell it, you get that share and the price increase back, or the rental income that they achieve. Whatever share you bought into it, you get that back. That's me loosely talking. Don't talk to me, go talk to the companies that actually do it. But that's the general ethos of it. The idea is that someone can then get into it for as low as 1,000 dirhams, 2,000 dirhams. Great initiative, great to see. But again, this is now being done to really help and assist, because we're seeing transactional volumes dropping. So it's interesting to see that the government is now moving to a segment of the population that doesn't necessarily have the money to be able to buy outright. So that's 2 initiatives to help move that on. It's great to see, but let's see what the impact of this is. It will be positive, but again, it's too early to tell what that is going to be. What's the summary? The summary is, look, I've said it already, transactional volume drops, which means price reductions will start, which means transactional values will start dropping, which means returns will start dropping, which means you'll then subsequently see prices dropping. You're also seeing general transactions dropping in general for sales, which if people can't sell, they will drop the price. So to me, this feels like the start. We're in summer at the moment, it's noticeably quiet. I think if you're in Dubai still, it's scary how quiet it actually is. The roads, of course, is a great indicator of this. But Q4 is going to be a big one. Q4 is the one where I think a lot more information will come to hand. I've said it before and I'll say it again. It is huge, the amount of, especially real estate brokers, that compare year on year. They're not doing Q on Qs, not doing month on months, it's year on year, because it looks good. And it does look good, it looks great, up by 20, 30, 40%. When we get to Q4, that is now a year later. So it'll be very interesting to see what the data is. Let's wait and see what actually comes from that. So in summary, I think all we can look at here is look, long-term rentals are in freefall, which we know. So investor insight, landlords are holding out for long-term tenants, losing income and flexibility. Now at AirDXB, we're a short-term rental company, amongst other things. We do brokerage, we do interiors, we do lots. Very big firm, so have access to a lot of data. I will say it in the next Big Short video, but I will give you the percentage of how many owners that now want to work with us who have tried to find tenants and can't. But I can tell you this week alone, we've had 4 people who've come to us and said we've been on the market for 2 months plus and we can't find a tenant. And what I say to them as well, the sad thing is with this, a 12-month tenancy is 12 months. You've now lost 2 months. So even if you found someone tomorrow, you've got 10 months worth of income over a 12-month period. What they're trying to get their head around and trying to adjust to is the fact that they were told when they initially bought it that the returns were going to be this. And they're now realizing that that is not the case. And we're seeing more and more of this. So as a percentage increase, it's hundreds and hundreds of percent. But I'm not saying we're seeing 10,000 people come through our door a day. Of course we aren't. But 4 alone just this week. So in 3 days, 4 I know of, and bear in mind our team is very big, of owners saying, tried to rent it for 2 or 3 months, can't find it, I'll come to you for short term. And what is very interesting, I've spoken to 2 or 3 of these and I've just said, okay, well, what are you going to do? Just try and find a long-term tenant at the same time? Because that's the beauty of AirDXB, it's flexibility. Come to short term, you can do what you want to do with the property. And they've said, we're worried. We're going to put on the market to sell. We just want out. So again, these different things are now coming through and different things we're hearing in the market. So in the next big short, I will give you a bit more stats on that and what we're seeing our side of owners that are coming to us and saying, I can't rent it, can you short-term rent it for me? Computer short-term, give us the keys and we get it straight on the market within a week, 2 weeks, and you're making money immediately. That's the great thing. We know that the rental market is tough, and we do, and we are seeing it now firsthand. So moving on, so supply is up, as we know, so prices are cooling. And then there's also pressure from the job market. So there's 3 severe statements there. There's supply is up, prices are cooling and transaction volume is dropping, and the job market's getting tougher. What does that tell you? So, and then the last point is, as we know, the government are intervening, which is great in a very positive way, and they're bringing these new initiatives to help and support segments of the market to get into the real estate world, which is great. You know, that's what we need to see. But where's my worry? 350 to 400,000 units are handing over in 30 to 40 months. For every 1 property that hands over at the moment, 5 new off-plan properties are being launched into the market. It's going to be a very interesting next couple of years. So unless there's a very big initiative, let's say what RAC have done by introducing gaming, will that have an effect in Dubai? Of course it will. It will have an effect, but I personally believe that prices have gone up so much, it's not going to have a big enough effect. And especially when you're seeing that level of stock coming in, arguably it could drown it out. Now, I don't know if gaming is coming. I'm not making that statement that this is what's happening. This is purely me talking. Other than that, 400,000 units coming into the market, and you're already seeing transactional rental transactions in villa communities, which are, you know, everyone needs villas, and villas, you know, there's not enough of them and demand is huge and the market is buzzing and everything is great. Green communities down 30%. Emirates Living's down 15, 20% in transactions. These are huge, these are double digits. This isn't 2 or 3%. These are big, big, big numbers. And we're only 7 months into this year. So let's see. So how will this impact the short-term market? Now, people have said this because being AirDXB, biggest short-term rental company there is probably in the GCC now, how do I see this? We're listing 100 plus properties now a month. So we're seeing our stock increasing like it never has before because people can't rent it. It's supply and demand in that situation. When I first got into the short-let market, I believe there was around 500 properties, something like that. And this is back in 2018. Now there's about 40, 50,000 available properties in the short-term rental market. Huge. With the level of stock that's coming in, I think what you're going to see is a lot more people are going to try long-term, can't get the figures they want, they're going to come to short-term. And I think short-term will experience the same situation as what's happening with long-term. It will become saturated and rates will drop. We have began to see this happen. Summer we're in now is probably the toughest summer I've seen in the 7-8 years of doing this now because of stock. There's more stock coming in, there's more stock available, which means people have more choice, which means that will have an effect on rates. So what do I see in the short-term rental market? Your income will drop. Okay, full transparency, you know, this is what the show's all about, because of the supply coming in. However, short term gives you that flexibility. If we're going into a market which will be negative, because that's what the signs are already telling us, you want that flexibility. So if you find that prices start dropping 2, 3, 4, 5, 6, 10, 15%, you want your property empty, ready for viewings, so when that buyer comes in, they can buy it immediately. Your property goes to the top of the list. You speak to any broker, they'd far rather have a nicely furnished property that is ready to be bought immediately and they can then move into whatever they want to do. So the short let option is exactly where you want to be going into this market. I know it's a plug, it's going to sound like a plug, and of course that's what our major or main business is. So that is something that you really, really need to be considering. So look, I think that's enough from me. Thank you to everyone that's been watching this. 109,000 views I think we're up to on the last video. Absolutely amazing. If you know anyone that wants to get into short term, any owners, we offer a 3,000 dirham referral, send them over. Again, everything is sourced, you'll see it on the slides. I've told you when I've given a bit of opinion. Any questions, chuck them in the comments below, call us, whatever you want. Our website, www.air-dxb.com. And look forward to our next video next month. Take care, all the best.